All right, let's talk about something you've definitely seen. You know those ads online, the ones promising you can trade these huge sums of money with just a tiny deposit? Well, that's a tool called leverage. And yeah, it can feel like a superpower. But here's the real question. Is it a secret weapon for smart traders, or is it just a super fast way to blow up your account? Let's dig in and find out. So let's just imagine for a second. What if you could take $100 and turn it into $50,000 of trading power? I know, it sounds like a fantasy, right? But it's not. This is the core appeal of Forex trading, and it's what pulls millions of people in. The big question, though, is how in the world does that actually work? Okay, so the magic behind all this, it's called leverage. The simplest way to think about it is it's just borrowed power. Your broker basically lends you a massive chunk of cash, letting you control a much, much bigger position in the market than you ever could with just your own money. And when I say bigger, I mean absolutely massive. A 500 to 1 leverage ratio? That's pretty common in Forex. Now think about what that means. For every single dollar you have in your account, you get to trade with 500. The potential for profit? It seems enormous, right? And just to put that into perspective, right? In the stock market, you might get offered 2x, maybe 5x leverage if you're lucky. But in Forex, it can be 100 times that. So you can see why this is so tempting, especially for traders who are just starting out with smaller accounts. It gives you a shot at a level of market exposure that would otherwise be completely out of reach. But you knew there was a but, right? Here's the catch. That incredible power, it's also your single greatest risk. And this really gets to the heart of what we're talking about today. Leverage is a classic double-edged sword. Yeah, this quote just nails it. Leverage is like a two-edged sword. When things are going your way, it's your absolute best friend, just multiplying your gains. But the second you start losing, it turns around and stabs you in the back, magnifying your losses with the exact same force. Okay, let's walk through a real-world scenario so you can see exactly how this plays out. Imagine you've got a $100 account. You decide to use 400x leverage. Suddenly, your tiny $100 is controlling a $40,000 position. You're feeling pretty powerful, right? On top of the world. Now, watch closely. The market moves against you, but just by a tiny amount. We're talking 0.025%. That's it. It's such a small, everyday wiggle in the price that you probably wouldn't even notice it in a regular trade. But this isn't a regular trade. And poof, just like that, your account balance is zero. Gone. See, that 0.025% loss on a $40,000 position, well, that's exactly $100. And since that was all of your own money, the broker instantly closes your trade to get their loan back. You are left with nothing. Absolutely nothing. But you know what? The real danger here isn't just the math. The real threat, that comes after your account gets wiped out. It's a psychological trap, and it has a name: revenge trading. And this is the emotional spiral that traps so many new traders. First, you suffer that quick, shocking loss. It hurts. Panic kicks in, and you get this overwhelming urge to win it all back right now. So what do? You deposit more money, and you take on even more risk, just chasing that one big win to make it all better. And the result, you wipe out the rest of your account. It's a devastating cycle. See, this is the problem. High leverage can turn trading into something that feels a lot like a casino. You're always chasing the jackpot, hoping for that one big life-changing move. But professional traders, they think like business owners. Their number one priority isn't hitting a huge win today. It's simply protecting their capital so they can survive, to trade another day. Okay, so how do you actually use this powerful tool without getting completely burned? Well, it's time for a major mindset shift. Instead of seeing leverage as a weapon to make massive profits, you need to start thinking of it as armor for your capital. Let's talk about something called the 1% shield. And really, it all boils down to this simple idea. Just because you have the power doesn't mean you have to use it. Just because your broker is offering you 500x leverage doesn't mean you should take it. The real key to success here is discipline and smart position sizing, not just maxing out your leverage on every trade. So this is the 1% shield. It's a super simple but incredibly powerful rule. Are you ready? Here it is.
Never risk more than 1 to 2% of your actual capital on any single trade. Notice I said actual capital. This is your first and most important line of defense, and it's based on your money, not the money you borrowed from the broker.
Here's exactly how that works in practice. Let's say you have a $100 account. Using this rule, you would set your stop loss so that the absolute most you can lose on that trade is $1. If you have a $1,000 account, your max risk is $10. See what this does? It keeps you in the game. Even if you have a terrible streak and lose 10 trades in a row, you've only lost 10% of your capital. You can still come back. You'll live to trade another day. So, what's the right amount of leverage to use? Well, first off, just forget about those 500x guru offers. Most professional traders are using 100x or even less. If you're a beginner, my advice, start with 50x or maybe even lower than that. The goal is to master the market and your own strategy first, long before you even think about cranking up the leverage. And this brings us to what might be the most crucial mindset shift for any new trader. Listen up. For your first 6 months, maybe even your first year, your goal is not to make a profit. Your goal is survival. It's about learning, making progress, and staying in the game. And to survive, you absolutely have to recognize the traps out there. Be super skeptical of any broker offering insane leverage, like 1000x or more. If you're trading in India, you need to be checking the RBI alert list. And be really careful of what are called B-book brokers. These guys actually profit when you lose. They want you to use high leverage because they know it's the fastest way for you to lose your money and for them to make it. So let's wrap this all up with a really clear goal for all you beginners out there. Your primary objective, your only objective for the first 6 months, is simply to survive and make progress. That's it. The profits, they will come, but only after you've learned how to protect your capital. That is the only path to long-term success in this game. Look, leverage is always going to be that double-edged sword. And while a lot of people get blinded by the promise of getting rich quick, you now understand the huge risks that come with it. You're equipped with the shield of capital protection. So now the real question is, how are you going to wield the sword?